Hello. Am I audible? Hi, Bhargav. Welcome. Oh, great. Thanks, Anand. Thanks, Bhargav. Hi, Vijay. Very good morning. Welcome, one and all. It's good to connect with you all again. Hi, thanks a lot for the ads, Vijay. Uh, so let's. Hey, thank you, man. Let's give a minute or two so that more people join in, and then I will share what might likely happen and how, as an option buyer, you can tackle this volatility, right? One of the biggest challenge is to manage the volatility on an expiry day, because if the trade goes wrong, whatever you have earned from morning, say even if you have got into a big profit for 5 hours, one wrong trade can wipe off and you will get into loss in no time. So that's the kind of volatile market that we are in. It's pretty exciting as an option buyer, but at the same time, it's too dangerous as well. So, how do you uh, manage the risk in this volatility? Is what we are going to learn in this video. So, let's wait for a few more people to join in. In the meantime, if you guys wanted to, if you guys can, hit the like button, YouTube algorithm will enable us to reach more audience, and then a lot of people might join. Cool. Thanks, Bhargav. Hi, Divya. Very good morning. Yeah, it's really happy to see all the people joining back. I'm so thrilled. Uh, I think the usual people who join the stream are here. Let's go ahead and then analyze what might likely happen, and then how we can deal with the volatility. So let's start off with Bank Nifty first, because that's the instrument showing enormous amount of volatility. And to remain sensible and then to play in Bank Nifty requires a lot of skills. So here you can see it straight away opened with a gap down, and then from there on continuously ascending clearly on the bullish side, and it has also hit the psychological number of 48K, right? So let's have a larger perspective of what is that we are going to see. Sudesh is here. Hi, Sudesh. Welcome. Still away from the market for 3 months. Just started watching market from last week. Fantastic, fantastic, Sudesh. You're at the right time because there is volatility. There is also scope for us to make money, but at the same time, we need certain discipline, certain technique, and money management and risk management are very important, right? So we are going to talk about how we can deal with this volatility. Nifty is fine. Like Nifty, it's like plus or minus 100 points on any given day, most often. Very rarely it trends more than 1% or 1.5 percentage. Very rarely. But usually it is in like plus or minus 100 points. That itself is a very good volatility for Nifty. Uh, but um, uh, but what's so surprising is sometimes Nifty is showing only like 40 points plus or minus, but Bank Nifty rallies like 500 points, 700 points, and no, either giving too much money or taking away all the money, right? So let's study that first. I'm going to turn off all the indicators so that the chart is clean. Here, as you see, first let's try to understand what is happening with the market, right? On a larger perspective. Let's go in for like say a day's candle. Oh God. So if you see, there was a lifetime I made, and then retracement. Again, it is reclaiming back, right? It's like going up again, right? So market is showing a strong signs of bullishness, but a drop like this, continuous drop like this will scare the people and make them think. One second, make them think that we are on a sort of bearish trend. uh, you should understand what is when the trend is changing, when a retracement is happening, which you will be able to find only when you have gone back in history and then checked and done your homework. You know that these are the retracement levels, these are the levels that it can come and test, and which it did. Like first time it retraced, it took support and then bounced back again. When it broke, it took another support over here and then bounced back. So there are different levels marked, which I have been sharing as a separate market outlook. 5 targets like that I am sharing, which will give you till where the market can retrace. uh, but when it bounces back, it is continuing to make newer highs. Like every time it is making newer highs. You can see that it is now almost towards the uh, high, all-time high, right? Marching towards the all-time high, only about 600 points away. So that's nothing for a bank nifty. It can be done in one day, or maybe if luck is there, it can happen today as well. So we never know what would be the further upside potential. And you might be wondering, what is this blue line? This is historically when I went back in time and then drew in 1 day time frame. Some sort of channel was formed, and this channel, whenever it is reaching this channel, it is like getting pulled back. So we have potential move up to 50K. That's what I would say, right? But will 50K happen this month? Will it happen next month? Nobody can say that, but definitely 50K is going to happen before the election results or right after the election results. So in mid short range, we are expecting the market to go and test 50K. That is absolutely a great possibility. Nobody can say it's impossible. We are just hardly 2000 points away, and 2000 points is not a big deal for Bank Nifty. So it should test 50K, right? But before it touches 50K, there could be some sort of drops, like sudden drops like this, and then continuous drops followed, and then retracements can happen. Then it will shoot up again. So positionally, you should have a view over next till May. What is the outlook? By May, it should easily test 50K. No doubts about that. That is one view that we should keep in mind. Now, if 50K is the target, how can I plan for now. So whenever there is any sort of sizable fall, you can start accumulating month, 2 months away contracts. Premiums will be higher, but it is worth taking 2 months away contracts and then accumulating, right? So I'll just tell you one small example. My baby is here. I don't think she will let us do the stream peacefully now, but having said that, okay, come on, 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 Rumi, come on, come. So, okay. Uh, so what we are expecting is market to test 50K. That is on cards, but it is going to happen in before May. But will it necessarily happen in the month of May only? Cannot say. It can happen this month as well. So we never know when it is going to happen. What I would suggest is go to the April month contract or May month contract. 50K strikes, maybe you wanted to accumulate in small quantities whenever there is a fall, you can do that. That is one of the safest way to manage volatility, because uh, in current week there is a factor called Vega and Gamma. These two factors are going to hurt you. You will suddenly see 200 points going up in a premium, and then suddenly it is dropping like 300 points. You will be losing. There will be no stop losses that would work. There will be no targets will look too small. Maybe you have taken 50 points, but then it is going 300 points. You cannot do anything about it, right? So if you want to eliminate all these things, play in month and far away contracts. Even OTMs are fine. If you are going too far away, OTMs are all fine to some extent. Okay, so that is one thing you should do positionally if you want to play. Sir, no, I have my capital is very less. I have only 50K, and then there's even 50,000 contracts are trading around 500 rupees in April month or May month. I cannot be buying so much. I can only play weekly or probably next week contracts that I can play. Then there are ways to do that as well. So the view is bullish, and it should test 50K in some time. When, we don't know. That is one. And retracements are possible. And suddenly there are times where puts are appreciating and calls are not moving at all. That is like continuously 2 days or 3 days it will be like this. When the fall happened, puts were increasing and then calls were not appreciating at all. And then when this sort of moves happened, again same thing. Even when the market retraced, puts were still responding very well, right? So for puts to appreciate, there has to be a continuous momentum. Remember that. Why I said that do not even think of entering into put side is, if you look at it, yesterday was a consolidation day, before yesterday was a consolidation day, yesterday was a consolidation with upside rally, and today is a bullish day. The puts are done. You should not be thinking of put side at all. Put side you should consider only when there is a continuous momentum on the downside and market is appreciating super fast on the puts. Like suddenly the premiums are jumping, 100 rupees it is trading, and suddenly it is like jumping to 200, 300, 400. That is the kind of momentum it should have. Only then it is better to enter into the put side. Otherwise, stay away from the put side. Put sides don't offer you money. Market is clearly heading north. Okay, that's the view, right? Now, as an intraday player or a next week expiry player, what can I make sense of this? Now, that is something we will discuss now. So far, any questions? Hi, Leo. Very good morning. Welcome. I shared a lot of information about the market view. Leo might have just joined. I'm not sure. But you guys have any questions? Is it clear whatever we discussed so far? Great. Makes sense. It's clear. Sure, sure. Now let's go to the smaller time frame. You wanted to play in next week expiry. then don't the 1 day view, 1 week view and all is for the month. Okay, that is going to help you in your convictions, right? Where the market is heading. Should I be worried if the market falls 1,000 points from here? Should I panic? Should I exit all my calls? For that reasons you need a larger time frame for study. 1 day, 1 week, it's going to give you whether a clarity on whether this is a retracement or a small pullback, or it is testing some critical levels and then going back. You, that that picture you can form when you do a larger study time frame. But to take positions, this larger time frame is not going to help on an intraday. For sure it's not going to help you, right? So you should check for 1 hour candles. Now if we look at the 1 hour candle, it has made a peak, it has made formed a doji, possibly it is coming down now. Okay, let's stay there, let's stay put there. Now what are the things you should look at? Now it's pretty obvious, looking at the charts, where the maximum consolidation has happened. You can see around this level the maximum consolidation has happened. Pretty simple, just start identifying these sort of levels. That is 47,300, right? If there is a sudden drop in the price, like suddenly tomorrow there is a gap down and then it is reaching here, question is, what should you do now? Would you be getting into the put sides? Would you be entering into the calls or do nothing? Hmm? Come here. Come here. Come. Say hi. Come on. Come on. All right, what should you do? I'm asking you a question. Um, Maybe for now, is there a way to hide these drawings? Yeah. Let's say the market is suddenly dropping. Today it has come here, and tomorrow it is coming here, and day after tomorrow it is coming here. Should we jump into the puts? If you see the market over here, should you jump into the puts? This red line, you see this red line. Should we jump into the puts? No. Okay. So Divya says puts. No. Okay. Actually, when you see a doji like this and then a red candle here, should we enter into puts now? So Anand says that there is a lot of support on the downside, and then we shouldn't be getting into the put side yet. So all of you are right. You shouldn't be immediately jumping onto the puts. You should only consider getting into the puts when it breaks something like this level. Let it break this candle and then go significantly lower. Then we will identify many momentum candles. What is a momentum candle? You can see that there are lot of green candles over here, but some are significantly larger, right? Some are significantly larger. Those are the momentum candles. If you see here also there is a momentum candle, right? So draw yourself some sort of zones, like if it breaks this, then this would be the target. If it breaks this, then this would be the target. If it breaks this, then this would be the target. Likewise, you can identify what are the downside targets. Likewise, you can form some sort of view on an intraday basis. So simply because market has formed a doji, you did a candlestick pattern study, and then there is some sort of M pattern or a W pattern that you see. Immediately don't jump into the trades. Assess where the market is. What is the larger perspective of the market? The other perspective of the market is it's heading towards 50K in months to come. Before that, it would do some sort of pullback, some retracements, some sort of small corrections that would be there. But when to enter into the put is the real question. So when the market comes and touches here, anytime, comfortably accumulate some month-end contracts, April month or May month contracts. Call side you can accumulate because we are having a view that it is going to reach 50K. If you are getting it at 47, 800, 280 or 300, let's say, it's a great deal, right? Why should you not accumulate positionally? Or next week positions also you can take, but the thing is that if the market further comes down, you have to go on averaging and then switch it to put side because it has a potential to fall another uh, 400 points, right? So you might have to do some averaging or enter into the put side, all these things. So weekly part is going to be a bit risky and challenging. Playing month end is the best way to deal with the volatility in this market. Like I said, not everybody has the capital to play month end contracts, far away month end contracts. A lot of people don't have money. I understand. In that case, have a discipline. You are not going to carry anything overnight. Anything overnight is not allowed with small capital at all. When I say small capital, anything less than 2 lakhs is small capital. Don't even think of carrying anything overnight. Okay? Because there is volatility, what you want is money. Some quick moves are there, then wait for the opportunity. Then, what else you can do? You can enable EMAs now. Right? Now, when you enable EMAs, you know the 9 EMA, 20 EMA, and VWAP levels are here, and 200 EMA is absolutely here. So, look at this. This is one thing that we drew without having the EMA enabled. Now, this 200 EMA is also coming towards here. So, possibly the strongest levels of retracement is up to the levels of 46,600. That's a very critical level, right? So this is one area that you should carefully watch because if at all there is a fall, it can come and retest this level on a weekly basis. So 46,500 is a possibility. That is 1,500 points down. Till then, it is in the bullish territory and it is going to just come and test it. Does it make sense? Yeah. All right. Sure. So simply just going by the chart is not going to help. What are the things that you should, whenever you do a study, put it like key learnings, so learning. Okay, so what are the things? Up to 46 500 is a retracement level with 200 EMA and momentum candle confluence. So this is one. Next thing is having first part is, let's go one step at a time. View bullish and heading towards 50K latest by May 2024. Okay, so this is the first view. You should. This is my view. You can have a different view. My study says that, or my analysis says that. This is my view. Whatever it is, even you can have a bullish view, but then have your view and trust that one. Trust that entirely. Do not go by profits and losses alone. Just have a conviction in your view. When I will change my view, hey Alex, Good to see you, man. Thanks. So first thing is having a view. Step one, that is the positional view. I think, yeah, positional view is a better word. So this is the positional view. Now, what happens in between? There is a possibility that it can retrace up to the levels of 46,500. Fair enough, because that's where you see 200 EMA and momentum candles having a confluence. Perfect. Now, third thing is, this is only for option buyers, not for option sellers, because option sellers will make money anyway. For option buyers, remember, recognize the side that has momentum. Okay, this you got to do on a daily basis. And how do you do that? How do you do that? Hi. Okay, come. But you should not touch mouse. Okay, come on, come on. Okay. Oh. Okay. Oh. One second. Okay, baby. Okay. See? Okay, I'll give you something. Okay, here you can see. Just a moment, guys. She wouldn't let me. She is sleepy. Usually she sleeps around this time. But today, um, when I commit something like I'm going to do a stream, that's when she will be like fully active. One second. Oh. Okay. Yeah. Go ahead. Yeah. Yeah. Thanks a lot, Bhargav. Yes, she is grown up. She is big baby now. All right. Um. So this is the part which people fail to do, because what happens is you might theoretically speak hundreds of things, but when the market opens, how many of you place order at 9 before 9:18? How many of you place orders? One order at least. Let's be honest. It's okay if you do. If you haven't placed, then fine. No, good, because always remember, it's just because the market is open and there is some sort of terrific volatility on one side, we shouldn't be jumping in. Recent times stop that. Very good. So first thing is, give yourself that first 5 to 7 minutes is good enough to assess which side is having the momentum. How do you know which side has the momentum? Let's see who gets it right. Which side has momentum? How do you say that? Strength of the candle with volume. Okay. Opening trades, so it's going to be very difficult to assess the strength, because volumes are just forming. It can change pretty quickly. Strength and closing of the candle. Sure, first 15 minutes candle is really important. One of the things that I do is just open up and then choose this, or you can do it in option uh, option chain as well. Just go here. Here you see this ATM strikes, right? ATM strikes. Now, when the pre-market comes, check the ATM strike. Like for example, market has opened at say 47,700. You just take what is the pre-market value. What is the pre-market value? Like yesterday's close. What was it? You see, the moment market opens, you see how much both those things are changing. This suddenly, it is spiking to 250, 300 like that, and then this one has gone to like say 40 rupees or something like that. Okay. And you very well know that there is one-sided move that has happened. Now start observing for next 7 minutes what is happening to the premium. Just pay attention to these two alone, this and this, right? Just this 40, let's say market is at 48k today. It has opened, pre-market has opened at 48k. You just observe both the strikes, see how much movement is happening for 7 minutes, right? And also have the chart by the side. If the market is coming down, is the puts increasing? Because today is a gap up, calls have appreciated, but is the put appreciating? Observe for next 7 minutes. If the puts are not changing much, and then the calls are dramatically falling, and then again it is going up, but the puts are falling further, we know that we should not be entering into the put side. Very simple technique for me. Which side not to enter is one thing you should you know uh, decide within first 15 minutes. That is, today put side, no. You can see even now, this is like 117 it was. What is happening? It has gone to 130 and this has gone to 106. And this will never come back to 120 again. That's the thing. That too on an expiry day. If it is coming back, see how quickly it is going down again. If it touches 120, it will super fast go down. It will go like 90 in a few seconds. Okay, so you know for a fact which side is going to give you money. Meaning, if the calls are increasing and then fluctuating so much, but one side is not reacting at all, that side you don't enter. Very simple. Don't enter into that side. Then you have first 15 minutes candle formed. Then you know whether it is breaking the high of the 15 minutes candle. Then you have your own trade setup, 9 EMA, 20 EMA, support zones, key critical levels marked, fast levels are there. Now club all of this and decide where you wanted to enter into the calls. Yes, today calls are going to work, but when should I enter? That is another part, right? So for which you will need some 5 minutes of time to assess. So 20 minutes, you will have 15 minutes candle, first to 15 minutes candle form. Then which side to enter, which side not to enter is known. And then which side market is likely to go continue, and when is the right price to enter. All these things you are getting it right now. Now it is pretty simple, right? Now you have all this information. Now strikes that you need to choose. I might be looking at the ATM strikes for my assessments, but I should always go and buy in the ITM strikes to make money. Does it make sense? Is everyone clear? Because we spoke a lot. Okay, thanks Bhargav for the feedback. So let's go in here, recognize the on a daily basis. How to do that? Oh god, not here. Sorry. Observe ATM pre-market values of both CE and PE to decide which side not to enter. Okay. Then let first 15 minutes candle form to decide where the market is heading, and wait for right opportunities with your trade setup In my case, it is 9, 20, 200 and FASP, right? So that is there. Then choose the right strike. 1 or 2 level items preferred for quick escalate. Is this clear? Maybe I will just lower this. Cool. Now the question is, sir, even after doing all this, I am still making some sort of, it's very difficult to choose, and my entries are not getting right. Sometimes I enter and then my stop losses are getting hit. You cannot place a stop loss like you used to do in earlier times. Earlier, some 15 points, 20 points stop loss might hold. Today, it is just going and hitting 75 points stop loss and then going up 300 points upside, right? Uh, it's extremely difficult to play that, which is why I am saying you should be playing in month-end contracts. Next month-end contracts will not show that much of volatility. Even if it does, you can hold because you have time. You have a weave of bullish weave, and you have time, and there is no gamma effect or vega effect as of now. So the depreciation will also be very small, and the reclaiming of that old value will also be super fast. You are not going to lose money. But with low capital, you wanted to curb this, then there is another thing that I would suggest. Whatever another thing I wanted to say is, like, you are observing this, right? You are observing these ATM strikes in the morning. You also observe what is the ITM strikes value, right? You observe it is, say that it is 173, right? And then you're seeing this one, appreciating and depreciating for 7 minutes. You are watching it, and then there is also 15 minutes candle form, and then you decide what is the right price to enter. My simple formula is calculate 15 percentage. Okay, 15 percentage of this is 10 percentage is 17 rupees. 15 percentage is I add another 9 rupees, 27 rupees, 30 rupees, round it off. So if I can get it at 140 rupees, it's a good entry, right? So simply place an opening order at 140. Okay, and if you can get that, fantastic. And if it breaches that and goes below, don't buy for every 5 points. Again, I have another systematic entry point where, when will I do the next entry? I would do, say, 115, right? My next entry would be 115. See, this one came to 115, again it dropped super fast, right? So here, this strike, again I would enter at 115. Third, if it goes down, where should I enter? Probably somewhere around 88 rupees or 85 rupees I would enter. And below that, if it goes, then it's not your day. You should just, close and then get out of the trade, right? Because it's better to pump in your money at 179, 180 rupees and then averaging till 85 than to, it's so much better, right? Your first entry itself is like at 140. Again, you are doing a second entry at 115. Again at 85. Then there is a small pullback. Also, the CE premiums are reclaiming back, right? It is jumping back to 130, 140. You will be in good profits. Usually, you will be in good profits. So one is premium based averaging. Okay, this is something I have never talked about, but then I think it's important because we are not meeting frequently also. So premium based entries of ITM strikes um, with 3 average plan. Okay, 3 averages you should have. Why I say 3 averages? Because I said market in no time falls 75 points and then goes up 300 points. From 179, if I calculate 80 points gone also 100 rupees. And I am buying at 85. My third buy is at 85. So, ideally speaking, if it is a bull's day, it should reclaim, right? Bull's day, or whichever side, put side or call side, whichever side it has fallen so much. Third average after that also it continuing to fall means it's not your day, and your third buy itself is far lesser than most people's stop loss, right? So you should not ideally lose money, and if you lose money, then book whatever the losses, call it a day. Does it make sense? Any questions? You guys have any questions? Maybe we can post this in group. All right. Now I will wait for you guys to take some sort of Q and A's. Let me delete this, and let's go and study the intraday now. Right now you can see I clearly mentioned post till 11 o'clock there will be no moves. You see, and then it's consolidating, absolutely consolidating. Isn't it amazing? Our analysis went right. So if you guys got some questions to ask, feel free. It need not be about today what will happen, which side it will go. In general, whatever you wanted to know, be it some sort of chart patterns, be it some sort of uh, indicators, anything for that matter. Let's keep the chart clean and hide this. Really? Oh, look at this drop. C is getting butchered. C is absolutely getting butchered now. That's it. How much of erosion would have happened? Now you see this, guys. It has gone to 84. From 140, it has gone to 84. And this one from 102 has gone to 140. Right? Now you must be asking, sir, you said don't enter into the put side. But what is happening? You see, this value has not yet crossed 100, but you are seeing that it is already going down pretty fast, right? So it will be only a spike on the put side, but it will quickly lose its value. But the calls are equally dropping its value. Now you see, this is 94 and this is 130. Add together, what is the value? You will see both the premiums will be eroding fast. No, Rumi, don't press in it. Okay, okay. Yep. Are there any questions, guys? Please feel free to ask. Now you see, this has bounced back to 112, 113, and this has gone to 106. That's why I said don't get into the put side, because even if there is a spike, you cannot take a trade on that. You need to be absolutely having super fast control. You should enter and exit in absolutely super fast speed, which is not for everyone. And why should you, right? Why should you take that burden if you don't? If you got the entry right, and then it has gone to 140, but did it stay at 140 for even 30 seconds? It didn't. It is holding 110 pretty comfortably. Call side is holding 110 at least pretty comfortably. But can you say that same thing for the spike on 140 on the put side? No. That's why no puts. Hi. What do you want? Okay. What is the reason for this type of behavior in the premiums? Simply riders are making the most of it, right? Now, what is happening is there is a heavy put riding as usual, but what they are doing with the calls is when it has reached a peak, there they are aggressively riding. Aggressively riding. For example, if I wanted to know how much, um, let me just add this to the watch list and I will show you. You can see the high this would have made, right? I will show you. Look at this one. Look at this range here. It has made a high of 328 in the morning, right? Even if you had written only one lot, it is giving you 200 points. So what the big players are doing is they are on the expiry day, they are jacking up the premiums of one side so exorbitantly high and then writing it over there, and they will almost 99% of the times they they will not lose money. They will not lose money. See, they can afford to keep a stop loss. Say 328 it is, right? Somebody, let's say they have sold it at 300. If 28 rupees also, let's forget 300 rupees somebody has sold. Okay, now it is trading at 118 rupees. Now this guy can afford to keep a stop loss of 80 points. 200 can be the stop loss, correct? If 200 is not going to hit, it is going to become zero, right? It's going to become zero, and then they are getting entirely 300 points in a single day. Single day, one lot, 300 points. You can think of the amount of money, right? As writers are making. So what they are doing is, on an expiry day, they usually try to spike up one side so high and get it around the peak, write it off, and sit for the rest of the day, having no chance for them to lose money, or virtually impossible for them to lose money. They can afford to keep a 80 point stop loss here. Even if I add 80 points, it is 195 only. Correct? So that's the kind of reactions we are seeing here. And look at this. This one had gone to 90 rupees. It has gone to 140 rupees and it is back to 124. But this one only once went to 140, and the time that we observed it was at 118. It is not even staying at 118. So puts are aggressively losing. On top of that, calls are also starting to lose. That's why 11 to 1 o'clock I said don't enter. Okay. And you can see a beautiful example over here. This is one momentum candle, and you see the support it's getting over here, right? This is the momentum candle, right? Very large one, and this is another momentum candle, right? So this is very massive momentum candle at 9 o'clock, 9:40, and after that, this is the second biggest momentum candle, and it is not able to break it. In 5 minutes time frame, also, it's not able to break it. Yeah, thanks, Sudesh. Glad you got it. Hmm. Yep. Want to sleep? Hmm. And another thing is you got to be watchful here. Bank Nifty is going up, Nifty is coming back down. They are in some sort of antagonistic. So it's not ideally the best time to uh, chase, because both the indexes usually are together. They travel together, and one index going down, other index going up. It's usually a very tricky day. Usually a very tricky day. If you had made your money, stop trading for the day. That's what I would suggest. Or if you want to play positionally, most welcome. This is an excellent day to play positionally. How do I say that? Because in the longer run, I'm saying market is going to hit 50K, and today we have Nifty going down. So accumulate Nifty of April month. Simple. If you want to play this positionally, accumulate April month contract 23,000, because if this is going to 50K, this will reach 23K at least, 23,500. So maybe 23,000 calls can be accumulated. I'm just, this is only an educational purpose. Please don't come and say that, sir, you said I bought it in huge quantities and then I lost money. Please don't do that. Uh, yeah. Oh, yes. Yes, Anand. It will be available. You can always weave it again. This is for educational purpose. So when I say what I'm talking, how I would be doing it doesn't mean that you should also do it. Okay, because uh, we are only here to learn, and I'm just saying uh, both the indexes are in congruence, like conflicting with each other. This is on the upside and this is on the downside, exactly opposite sides. Now, if this index is confusing, then go to the other index and then start accumulating positionally. You can all you just keep two options, Nifty and Bank Nifty. In one of it, you will know what to do. At least there will be no day where you don't know what to do at all in both the indexes. That will not happen. You will have some sort of clarity on one of the indexes at least. So go ahead. If I were you and I am doing in Nifty, then I have a view that it should reach 23K when the market hits 50K. So April month contract or May month contract, 23,000 calls can be taken at this level. Very small quantity. Maybe you have money to buy 10 lots. Let's say uh, maybe you take two lots. If there is any fall and then it is coming to 200 EMA, I would be more than happy to take three lots. If it further goes down, then I got to see till where the retracement levels I am comfortable with. Maybe till here, 21,500. Here I will take five lots. Then market retraces, let's say you will be surely in profit. Market doesn't have to go all the way up here, even if it comes back to this level, because you are accumulating five lots over here, and then you are deploying only two lots here, three lots here, and then five lots here. So your average actually will be somewhere here. The market reclaims till this level, you will already be in profit. Exit the five lots and run the remaining five lots for future. You know, that's how you should plan positionally. See, what happens is there is one interesting thing to note. I'll say which one is more profitable. Okay. Okay. Um, let's do a poll. Hi, Papu. Then don't type in the answers. Just start polling. Once we have enough number of votes, then we will decide and discuss. Hey, Papu. Okay. Here, here. Bank Nifty and Nifty are in upward. Mid cap and Nifty are on downside. Okay. Mm-hmm. Wow. Constant battle is going on. It's an interesting. Okay. Okay. Very interesting what's going on. So nobody is saying intraday and BTST. All are going either for scalping or positional. Interesting. Okay. Let's, instead of me telling, I will ask questions. Okay. Let's understand each of this and then go. Why BTST? Nobody has voted. Why do you think it's not great for long-term sustenance? Why BTST is not good? See, we are talking only in terms of option buying. Okay, only as option buyers we are talking here. Hey, Papu, wait. No, no. Oh, Jagan says that it's difficult to predict the market and we will never know what will happen tomorrow. Fantastic. Okay. What else? What are the other reasons why BTST will not work? Or is the market led off in odd or even mode? Absolutely right. Can't predict the direction for the next day. Excellent. One of the most important reasons why you wouldn't do a BTST. Say you have 50 lots of a position and it is in 25,000 rupees loss. Why don't you carry it overnight? Premium DK. Excellent. So there is a premium DK because you will be mostly, if you are doing a BT, why you do a BTST and not a positional trade is you don't have so much money in your account that you, at the max that you can afford is BTST, right? A positional trader might deploy at different levels and then may carry the position. Okay, one second, one second. No, see here. One second, one second. Okay, yeah, here you go. Okay. So as a positional trader, you have money, and then you are playing in far off far off contracts. So there is no decay, not much of a decay. But in BDST, there is a significant decay, at least 10 percentage. Even if it is a next week expiry, there is a possibility of 10 percentage decay with flat opening, or even 0.1 percentage down. Also, 10 percentage decay will happen. No doubts about that. So BTST is extremely risky considering you play only this week or next week. In both the cases, long run you will lose big. So BTST is not an option. What about intraday? What happens with intraday? Absolutely. Divya, you're spot on. Why not intraday? Yeah, there is very inconsistent. There is this move, and then suddenly there is this fall. You would be thinking that this is reached peak, and then it is coming down. So probably you would have taken a call, been put side, and then market has gone up. You would be squaring off and entered into the put maybe here. By the time you decide to book some profits, already it has recovered. You will be making double loss, right? So not even that. Maybe you have entered a put side here, and then market reached. You book the loss, and you entered into the call side, and then market comes down. You will be making a lot of mistakes. You will be making a lot of mistakes um, if you stay too long in the trade. Particularly if you are in profit, that's fine. If you are in loss, the panic starts in because maybe with the scandal it is showing only like 5k loss, but you do some double quantity buy and other things, and then when the market comes here, suddenly it is showing 12,000. Again, you are doing something, it becomes 20,000, 25,000, and there is no end to it, right? Like there is no end to it, and the shorter the duration, that as the time progresses, you will forget your discipline. So the chances of you making over trading and then making your losses bigger is very high when you stay too long in the trade. Correct. But the truth is, but the truth is, intraday is super rewarding than scalping for those who have patience. The only difference is calmness of mind and knowing when to enter and when to average. If you have these three qualities, if you know when to enter, if you have patience, and you know when to average, these three things, intraday is the most rewarding. Okay, most rewarding of between the options of BTST, scalping, and intraday. I would say far more rewarding is intraday. Yes, intraday means exiting before 3. Morning 9 o'clock you entered into position. You did an average around 1 o'clock. You did a third average around 2:30. You got out of the trade before the day ends. 3:29 you exited. By by the time the market closes, you should square off. That's intraday, right? This is far more rewarding because with patience, you will wait for the right entries. So one entry you have entered and then trade goes wrong, you will not make any hasty decisions. You will know only at this point I will do my second average. So you will be waiting. You will not be crazily doing all the averages and switching. Uh, your like scalpers will tend to lose more because they see this and then red candle they will switch their positions. Again they see upside they enter into call. Again they see red they enter into put. Probably instead of making money on all sides, they will be losing money on all the sides. Scalpers, if trade goes bad, that can wipe off the capital in minutes. In minutes, it can wipe off the capital. But in intraday, you know, okay, it has gone up here. Let me wait till another 6 hours is left. 6.5 hours is left. Let me wait and see what's happening. Again, it comes and then takes support and then it rallies. Now you know that you are on the put side. Market has rallied so much, and you can even now decide to switch your positions. You will exit all your puts and then wait for the right opportunity. As soon as it touches this 9 EMA, okay, let me enter into the call, and then you do some booking over here. Again, it comes and touches, you do some booking over here. Then you can do some sort of scalping on the call side. So An intraday player has an option to become a scalper at the later part of the day, but a scalper can never become an intraday player because you, as a scalper, would have already lost big money. You will not have patience to recover that sort of money waiting for the whole day. You lost 50,000 rupees in 5 minutes. Now, do you think you will wait 6 hours to make 50,000 rupees? Absolutely not. You would want to recover that 50,000 rupees in another 5 minutes. That's what would happen as a scalping mindset. Okay. Yes, Papu. Okay. True. Okay. What I will do is I'll put my baby and give her milk. She is feeling sleepy. Just give me 2 minutes. I'll be back. Come on. Come on. Okay, I'm back. So I was saying that um, as an intraday player, you have. Okay, let's put it down. Okay. So BTST is not possible. Most often you will be losing big money when you do BTST. Then let's talk about intraday. Not even discipline. It is more of patience, entry, average strategy, averaging strategy. And exit strategy. Then this is far more rewarding because low order quantity and low brokerage, right? So you will you will eventually make good returns here. Say that you have made 1 lakh using intraday strategy. Over time, you have made 1 lakh. Probably your brokerages would be somewhere around 20-25,000. Okay, so that's what would go. But as a scalper, what happens is, even if you had made 1 lakh, there is a strong possibility that your brokerage is 1.2 lakhs, because you will be ending up buying for every 2 points, 3 points, and then over time you will lose your senses and then go blindly. The chances of you to go and lose money for in brokerage is far higher in scalping. Yeah, so yeah, Divya is claiming to have lost 50% of the capital on brokerage. Yeah, absolutely. So scalping, it's okay, but extreme brokerage and high probability for washouts or capital wipeout, right? So a lot of people do scalping because it is trending, and then a lot of people are following scalpers very actively. They feel that it is excellent thing, but even the best of the scalpers, if you look at their, I have seen a couple of people's P&L, they have shared explicitly, of which brokerage is more than 50% of what they made. Okay, more than 50%. So we are talking about best of the people in India are paying more than 50% in brokerage. Then who are we? We are nothing in front of them, right? So it is something I wouldn't recommend if somebody wants to specialize in market and then take trading as a career. Don't enter with scalper mindset. You will lose everything in your life. Yeah, correct. Absolutely right. It interferes with your psychology, with your investing, everything. Something maybe you would have invested in your mutual funds and gold and other things. You lost your money, you will end up closing your mutual funds, you will end up closing your FD, pulling that money and losing that one also. Probably mutual fund is giving you 20% return. You have invested last year and then it is giving you 20% return. You pull that and then you put here, it becomes zero. That 120% of gain also is gone. So you are not only losing the money that is left in the account, also the other investment that is there in various places, you will pull out and lose. Scalping, absolutely no. But a lot of people will disagree. Good luck with that. Go ahead, scalp, and see for yourself. 2 years you scalp, and you still have some money in your account, then you are great. I will learn from you how you do scalping. So the last one is the positional. Probably this is the most rewarding and psychologically beneficial for your health and wealth. Here you pay the lowest brokerage in all trading formats as buyer. Okay, as a buyer, this is the lowest you will ever pay. This is the lowest you will ever pay. I'll tell you one small example. Okay, let's say that you have taken a 50k strike, okay, of next month end contract. Okay, next month end contract. Say you have taken only two lots. Let's assume you have taken only 2 lots around here. Okay, when the market gap down here, maybe here around here, 47,500, you took 2 lots in the morning. Let's say what has happened. Okay, I'm going to 24th April. Okay, 50K I am going. Okay, let's say 49,500 is what it is showing. 50K, let's say. This is in Bank Nifty, 24th April. Okay, right. Now this one is trading at 549. Okay, I'm just simply giving you an example, assuming that your capital is only 1 lakh, because at the money you see the problem. At the money is trading at 1,300 rupees, 1,400 rupees. You cannot buy, right? You cannot buy 10 lots. You should have a bare minimum 2 lakhs capital to buy that, right? Like say that I wanted to buy 10 lots. You need a capital of 2 lakhs. Where will I go for that, right? So for that reasons I am saying, let's say you have taken a 50K call, okay, but look at this market depth. It has gone to 595 and the low was 413. Okay, even if you had got at 450 rupees, you have got 100 rupees. Okay, 100 rupees you have got. So 30 quantities, 100 rupees. How much it is? 3,000 rupees. No? Yeah, 3,000 rupees. Correct. Yeah. So, and worst case, what happened? You have taken at say, you have taken this position yesterday at 460 rupees. Yesterday evening before it closed, you took it at 460 rupees. Worst case, what happened? It has gone to 413. How many points? Probably 50 points, I would say. 50 points it went low, but then it is right now trading at 550. Correct? So, for longer time frame, this is excellent. If your view is this, there is no decay, nothing. Simply it is appreciating. And it won't be jumping like 1,000. From 400, it will go to 700, 1,000, like that, and all. It will not go. It will go very steadily, 100 points up, 100 points down. That is good for your health and heart. Okay, so this is more rewarding because number of trades is least number of orders, exact plan for averaging, and no time decay almost, right? So I would say positional is absolutely rewarding, but how many of you can wait and do this positional? The problem is here today probably you are making this 3,000 rupees. Sir, 3,000 rupees is nothing. One scalp if I do, I will make 3,000. One scalp if it goes wrong, you will lose 3,000. Right? So intraday again, you are constantly looking at the screen. What are the pros and cons? You are continuously looking at the screen. You miss one opportunity, you get agitated. You're psychologically taken for a ride. You pay heavy brokerages. In all these setups, you are paying heavy brokerages. You cannot relax. You cannot simply be at ease with yourself. Can you sleep calm? Absolutely not possible. No. Zerodha doesn't allow, Adivya. Zerodha will not even allow 300 400 points away sometimes. It's one of the worst app for OTM strikes. So what I use is TradeSmart or Angel. Both allow deep OTMs. You can even go 5,000 points away strikes and choose. If I wanted to buy, I can buy a 40,000 put. Okay, I can give you my referral code for Trade Smart. If you guys want, you can use that, because flat brokerage of 4,000 rupees you pay for a month. In a month, the brokerage that you are paying, right? Like 20 rupees per order or whatever it is in your current one, that is fixed to 4,000 rupees. That is one option. Sir, my trades and all are not that big. I am playing very small quantity. Then it is 15 rupees per order, and whatever the government charges are, right? So the brokerage that I am taking is, I am taking 4,000 rupees plan, because obviously volume of trade easily per day brokerage itself can go to 2,000 to sometimes 10,000 also it goes, depending upon the momentum. For example, if it is a trending day, I see multiple opportunities and then I enter try time with good quantity, exit. Easily the value of the trades on both sides will hit some 10 lakhs. So it makes sense for me to take that plan and pay that brokerage. But otherwise, uh, if your total deployed capital or the number of trades, trade value per day, if it is not crossing 10 lakhs, then trade value per day means, say you buy 5 lots at 500 rupees, exit at 575. Again 5 lots at 500 rupees, again exit at 550. Now, if you calculate the trade value, it would have already come to some 6 lakhs or 7 lakhs. So it's fixed with all other charges. No, that is only for the broker part you are paying. All the other thing like SEBI, GST, this what is it, STT, those charges will be there. If you look at it, where you are paying the most is the broker's part. Particularly as a scalper, in Zerodha, let's say that you execute in market order, you have taken 500 quantities. Probably it has got executed 100 quantities at 100.05, another 25 at 100.10, another 25 at 100.15, and then full order gets executed, say in 10 orders. Then you are paying 10 brokerages. 10, it will consider as 10 order into 20, 200 rupees you are paying straight away for buying, and for selling 400 rupees straight away gone. For one trade you are paying 400 then in Zerodha. I am paying irrespective for the whole month only for 4,000 rupees. So that is good for me. So got it, guys? Okay. I will put this also into our stream is still going on. So look at this, guys. This is the, let me just turn off everything. Yeah. So this is, where is that? 11 o'clock. 11 o'clock market, the candle closed here. Where is the market trading right now? over here. Now you see why I said till 1 o'clock there will be erosion. Complete erosion. These many candles are so useless. Now that much time has passed, and what happened to the premiums? Let's go back and see what happened to the premium. See, this has become 124, this has become 64. So, lot of observation is needed. If you want to make money as buyer, there is lot to observe without taking trades. A lot of times, this is the most difficult part. When you make big money, you will not be focusing on the learning. When you lose big, you will be absolutely rejected. You don't have any money to play. Again, you will not be observing. So when will you learn? So it's a conscious effort. You have to consciously say that I'm going to learn today. Whether I made money or lost money, I'm going to observe what is happening. Or if I made big money yesterday, then why did I make big money? I thought I will make only 5,000, but let's say I made 40,000. Then why, how did that 40,000 came? Why suddenly that there is a 8 times return? I want to study that because I would say I am expecting only 5,000. It has given for next 8 days together. So for next 8 days, I don't have to trade. Let me observe. So I will spend time in observing how the premiums are moving, how ITM strikes are reacting, all this sort of study we should do. Or if I lost big, let's say I am expecting I will lose only 5k, but I lost 40k. Now 8 days I have lost. So chances are that if I continue to do next 8 days any trading, I will lose whatever is left. So again, don't trade. Next 8 days you study. That is the only way to forcefully stop yourself from trading and learning what's happening. Yeah, correct. Siddharth, hi, welcome. How are you, man? Yes. So we were discussing about how we should, balance because as we age, um, it's not always about money. It's also about how you manage the stress that you take on a day and how much risk yourself you're putting in terms of mental health and stress levels and also the capital. So positionally is the most rewarding but requires extraordinary patience because your money will come, but it comes slow and steady. Yeah, there is a lot of decision fatigue. Correct. Rightly said. Rightly said. Let me have a quick look at my baby if she is asleep or she is still. Hi, Selvi. I'm good. How are you? Happy to see you. Finally, all the guys are back. I'm very happy to see. Just do hit the like button of this video. Uh, and then I know I will just take some 2-3 minutes break and come back. Need to pick up some water. Also keep an eye on my baby if she's asleep or what she is doing. I will have a check and come back. Max to max 5 minutes. I should be back. Hey guys, I'm back. Am I audible? Okay, great. Now we have already reached 1 o'clock, right? And possibly from here there are moves possible. And how you can take advantage as a option buyer. Now, how do we decide? Let's talk practically. How do we decide which side to go, right? Now, what are the possibilities? Market may consolidate here to the end of the day. There are only three possibilities. For the rest of the day, market might consolidate here. Then both sides we are losing money, right? Very simple logic. So, but I, as an option buyer, wanted to do the trade. Now, how do I ensure I do the trade? For which, what I can do is I can enable both the EMAs. Now it's trading at 9 EMA and 20 EMA, and almost it is confluencing. And what we know is market has already taken VWAP support 20 EMA, 9 EMA, and then continuously rallying up clearly on the uptrend. But Bank Nifty, Nifty on the other side is on the downtrend. So if there is any sort of breakout, there are two possibilities. Market going to make a fresh high and then go towards this 400 levels, 355 levels, correct? That is one possibility. So either market is going to go here, or there can be a drastic fall, right? Very sharp fall to the levels of 200 in EMA and this confluence. But getting into the put side is risky. Getting into the call side of current week is also very risky. How do we deal with this then? There is one thing that you can do. You wanted to take some chance, but also manage the risk. Let me just set up few things and then bring it here. Do you see sensible over here? Is sensible visible? Okay, great. Now I'm seeing 48,000 market is trading, but I don't want to take chance. So I'm going for this contract. Okay, this contract I'm going, and I'm buying one call of next week because larger trend is bullish and I'm expecting a breakout of another 350 points. Okay, I will come to that, Siddharth. Just one moment. We will finish off this strategy part. Now, if I have to play this, I got to take some chance. Now, why I'm giving myself next week strikers? There is a possibility market may go down as well, and I cannot really afford that risk. Correct. So I am going current week expiry this direction, and for bullish view I am keeping this. For bearish view, it is trading at 64 rupees. Correct. I don't want to lose this much money. Rather, I would like to take this, and probably even instead of taking at the money, I would like to do this. Now, what is the risk? The risk is just 2000 rupees with this combination. If there is any sort of fall, I'm going to make big money. If the market continues to go up, again I'm making some good money. Though it may not be if I'm taking one lot, my risk is reduced, but on the downside, it takes time, right? It takes time. Just the decay is there. Correct, sir. So one strike lower, I'm going on the put side because I'm not betting on the put side, but just to keep that possibility, if there is any sort of sudden fall of say 500 points, I need not worry about the next week expiries call side, because current week's gamma is going to take care of that thing. From 36, it can become 300 rupees if there is a 500 points fall, and probably this one from 478 can become 200, or maybe 250. It's not going to decay much, or it's not going to, its time value will not go much, just the positional value will fall to a large extent. What I can do is I can book off this and then do an average. Here only one lot I have taken. After 500 rupees fall, I can do two lots buying and then bring my average to say 300 rupees or 325 rupees. And then if tomorrow there is a recovery or some sort of pullback, then I will end up both the positions in profit. Does it make sense? Why this one lot or two lot is up to you. I would say two lots, because 72 rupees is ultimately I'm going to lose by the end of the day. But if the market continues to go up, this 400 can become 600. Still, I will be making 50 rupees, right? Because 70 rupees, if I add to this, it becomes 550. And if this becomes 600, then still I am gaining 50 rupees. That is how you should deal with the volatility. No trade between 11 to 1, and after that I wanted to take some risk, then this is how you should plan it out. Does it make sense? Let's say I want to keep a max loss of about say 10k, 11k. Maybe multiply this lot by 5. 10,000 rupees is the risk. But if there is any sort of breakout on both the sides, I'm going to make good money. Right? So Siddharth says that I was long BTST positional, but today after booking, not confident in long again as buyer. I will wait for profit booking or minor fall to go positionally long again. Sure. I think we discussed about the positional views for next 3 months. What is the outlook? All these things. We are expecting some 50k to be touched. But P lot is expiring today, correct? So what I am saying is, if market is going to expire here itself, what is that I am willing to lose? I am willing to lose this. This is the money that I am risking. I am defining how much I am going to lose as a buyer. See, the problem with a buyer is they don't define how much they are willing to lose. I am capping, this is what I am willing to lose. If this is not fine with me, then I will switch it to 3 lots. This loss acceptable to me? No. I want it to be below 5k. This is acceptable to me, then stick with this. This is all the risk that you should be trading. Why people lose big as a buyer is they have the freedom to buy and average anytime that they want without assessing how much they can lose. Now, this is what I can afford to lose, then stay with this. Yes, today expiry, if there is no breakout, this 36 will become 0, and then this 470 may become 450. fine. That is okay. But end of the day, close both the positions. Don't carry it overnight. But if there is a breakout on either side, it's going to be rewarding. If you don't want this much risk, maybe you alter the ratio 2 is to 3 or 1 is to 3, whatever suits you. If you anticipate a breakout, then do this sort of ratio. One of next week, because that is the strong wave that you have. You know that market is going upwards and you have a very strong belief in that, then go for next week, because even if today it goes wrong, you stand a chance for it for tomorrow. Here as a writer, there is a lot of things that you can do. Say along with this, I wanted to also reduce my risk of theta decay. Then I can also go ahead and then do this. What I can do is to um, go here and then say I wanted to do a writing of this, and say 2 lots, and also current week buying of. Now what happens if the market goes up? I'm not losing anything, almost like 500, 600. But if there is any breakdown, I'm standing to lose. If the market is consolidating, I'm lowering my risk. And what is the capital needed? 37,000, right? So multiple things that you can do if you get into writing. No, if market goes up also, I wanted to make something, then this is what I would suggest. Add another lot writing of say 100 rupees, and then current week you buy um, now this one doesn't look appealing. 2 lots here, and then current week 47k. Yeah. uh, one second. No, first let me remove this, and yeah, calls. Oh, wait a second. I just messed it up. One moment. 48k is over here, and then buy this 2 lots. Next week thing, you are buying 48k 1 lot. So this is it, and so this is the spread that we have, in which you don't want to lose 2000 rupees. You want to reduce this as well. Then current week, what you have done 40, this one, right? 48,000. Now or even higher. Correct. Now, 23,000 is your investment, 2,000 rupees is your loss, and any side breakout, you are making money. If it is staying here, then nothing can be done. Right? This is so good. Like nothing big risk here. 2,000 rupees of risk, 20,000 rupees is your investment. Any side breakout is fine. What more do you need? Right? This is perfect. So how do we exit? Do we exit both positions at the same time, or exit one at a time and later? So the thing is, if there is any sort of breakout, then say that the market has quickly moved here, book both the positions. Book both the positions. Don't leave one side. Book both the positions. Supposedly downside breakout has happened. Book both, because next week expiry only. No sir, why can't I take delivery? And then you can do that. I would encourage you to do that, provided you are also going to close that position. And then supposedly this, let's say this position, this has become from 47 has become 200, this has become say 250 rupees, it has come to 250 rupees. Now this position would have become say 200 rupees, right? And this position would have become say 50 rupees. Now this and this will equate, no problem. This and this will equate because this is next week expiry, this is current week expiry. So you will close both of these together. Now you want to book the profits of this, you can book it. Now this has become 250 rupees, right? This is the problem. This is one that is going to be at loss. Now you wanted to do average, maybe you buy double quantity at 250 rupees, and then your average has come to 325, let's say, for 3 lots. But still it is an open risk, right? I don't want to do that. Instead, let's say I close this in profit, this in no loss no gain, and this is in no loss no gain. Only this position, it is currently at 325 rupees and 3 lots, let's say. Okay, now for this I wanted to keep an edge. Now what I can do, I can go further of next week expiry, and then 325, right? So I will go 155, 110, and another say 90 rupees, 3 lots of writing. Now the max risk is 9,000 rupees. For this, maybe I wanted to buy some edges. Probably I'll go far off, buy something at 4 rupees for 3 lots to just get my margin back. Now look at this. How much is needed? 58k. And if the market continues to go up, I am making money. If it is continuing to go down, I am limiting my risk to 9,000 rupees only. And I can, suppose if the market goes down, this 150 becomes 75. I can close this strike and then write another strike. I can keep on doing it till I come in profit. But let's assume if a bought position has become near zero, we can keep it. Maybe before expiring, that near zero can become double digit. Sure. I mean, I'm just talking about the exit strategy and how you can roll over your positions for the next week. Of course, if it is near zero, then I would like to take that gamma effect into consideration. Last half an hour, if there is a 700 rupee fall from 1 rupee, it can become 200 rupees also if luck is there on your side. So definitely, instead of closing it, I would leave it open. But assuming that it is expiring zero, I cannot leave the other position open for nothing, right? I should have some backup plan. Because if I don't do this, what happens is my net risk is how much? It's My net risk is going to become super big. It's becoming 14,000 rupees, which I don't want. I want to have some control. Even if I am playing directional, I want to have some control by writing. Is that clear, Bhargav? Is it clear, guys? Everyone understood? Two, three, four, five, and by five. Oh, Abhishek was calling. Hello. Hey, Abhishek. Yes, I'm good. How are you? I'm in my home, Kannamangla. No, Kannamangla. This is in Whitefield. Yeah. Yeah. Where are you? Man, what is that? Can you spell it? Oh, okay. I'm doing live stream right now. Uh, so just one moment. I'm just checking the kilometers. Uh, uh, it's showing about 19 kilometers. No, if you are anyway crossing by Whitefield, do let me know. You can come home actually. Okay, right, right. See, the thing is, baby is there. I have to keep a watch on her. So evening means Friday is possible because my wife will be home and I can come and you know, meet you. Or if any day you can come to home, that is even more simpler. But if in case it's difficult, then we can plan somewhere in between, and then I can come and catch you. Yeah, yeah, sure. Do let me know where you will be on Friday. I will make some plans, and then even if I request me to travel, I can do that. For me, Friday, Saturday, Sunday is not a problem, but any day in between would be problem because baby will be alone. Yeah, sure. Ah, okay, okay, okay. Sure, sure. That will be awesome. Everybody is back on stream. Yeah, uh, join in sometime in your free time. Uh, all right. Yeah, bye. Uh, so that's Abhishek is in Bangalore. Hope we are getting some time to catch up. Let's see. Um, we want gold. Gold is what? XAU something, right? What is the code? XAU? Mm, gold CFD. Okay, gold CFD. Looks like some sort of exhaustion at the peak. Clear rejections, and then it is trading around 20 MA and 2 and 9 MA and 20 MA. But oh, ignore that and then keep this on this momentum. There is a possibility for it to retest 98, 88, and 78. Retracement levels are possible. Uh, this is one possible thing. I see a strong exhaustion at the peak. Over here, if you see, it's like struggling to move further, just holding up. It should ideally come down. I'm not sure. Um, but to me, it looks like at least this level of pullback is possible. 2109 level of retesting is definitely on cards because this is the momentum candle, after which there is not much big candle like that. So if it is going to retest, it's going to test this level before it climbs up any further. Plus, gold is not just purely a technical chart index. It has many other factors, so I cannot be very sure about it. Only this paper trading, some challenges going on for which I started seeing this. Otherwise, I have not done any gold trading at all. So I'm not sure. So that for me, if you ask by the charts what it should test, Fibonacci retracements of 20, 98, 88, and 78 is there. And with bare eyes, what I can say is that it should come and test this momentum candle's base. This should be one level that it should test. So 2108, 21, 2098, 88, and 98. Somebody posted in the group, so I just took it. Yeah, Vijay. But what happened? I took the position and went for a break Saturday, Sunday, thinking that the market will be not there. But Bitcoin and all is trading, and it has gone into very huge loss. like suddenly, I short something at 60,000 or something. It went to 69,000. So I just lost interest. I didn't even see. Oh, Anand has posted. Yeah, yeah. We were out of town over the weekend. Came back on Saturday. Sorry, Saturday we went. Saturday, Sunday, Monday. Monday night around 11 o'clock only we came home. Oh, okay, okay. I see the breakout is there on the downside. It's very likely because with these levels of rally with gold, you cannot say a thing. That's the thing. It may sustain and then make new rise, but definitely all of which are momentum candles. It should each one is a potential testing area. Definitely each one is a potential testing area. If you have not mentioned the word gold and then asked me if it is a stock, I would clearly say that yes, it's going to come and test this retracement levels are going to be tested. I will simply say that. But with gold, you cannot say that. Gold, you cannot say. Bitcoin, you cannot say. It is going like $4,000 in one day. Next day, it is. Expecting some retracement. Again, it is going another 4,000 point. It's out of that one is actually too much. Too much. You can't really make much sense. Okay, let's focus on the gold. And this is what Bank Nifty, right? Oh, right now it is at 65,000. Okay. Oh, okay, okay. So only the members can have, can take part in the trading, is it? Vijay, you're still there. Very silent observer, Oh, one moment. Let me close the door. Just a moment. All right, I'm back. Sure, Vijay, no problem. Um, all right, let me talk about something very important now. Um, let's say I have a bullish view, right? How can I trade? Say I wanted to absolutely reduce my, what to say? Let's consider a very idealistic situation where you are not dependent on the money from the market. Okay, you are doing it purely like a very established trader, like pro trader. Um, and then you have your other incomes providing your monthly requirements and want to play this, then how can you do it? Simple thing could be, let's say I go for next month end contract. Okay, now what is that? My view is bullish, right? I am keeping a bullish view. Say market is at 48,000. I am saying market can go to 50K, right? I'm going to take a very aggressive strategy. 48K I'm buying. Okay. But the risk is for one lot, I'm going to lose 22,000. I don't want to lose that. Now what I do, I simply go forward and then get myself a cover at of 900 rupees. My risk has come down to 8,000 rupees. Correct? From 22, it has come to 8,000 rupees. Fine. Still, I wanted to eliminate. What I do? I go and write this as well. Or maybe I wanted to go and write this. And now you see, if the market goes down, I am not losing anything. Correct? I'm not losing anything. If the market goes up, tomorrow itself, if the market goes up, then I will be losing money. But I don't have to worry about it because let's see what happens. Thursday, Friday, Saturday, Sunday holiday, Monday market comes, I am covered. I am in profit. Correct? So if there is a market crash, no problem, you're making some money. If the market is continuing to go higher and higher, what is that I am losing? 600 rupees. No problem at all. And on the day of expiry, I can make 14,000. Now, what is the margin required? 95k. Why it is showing 95k? Because two lots of writing and one lot of buying. Now I wanted to reduce that. What I can do? Simply go ahead, take this next week contract because today it is expiring. Say 50,000 rupees where it is. It is at 20 rupees. I don't want to pay 20 rupees just for margin release, right? So I'm going to buy this, right? Now the graph will look so messed up like this. Sir, if the market goes up, I'm not making any money. Why should I go with this? Remember, your main position is this. This view you should not lose. Hey, Abhishek, welcome. How are you, buddy? By C or P? Oh my God. You tell me. We all will deploy the site that you are suggesting. Now, this 5 rupees, you shouldn't be worried. What is happening is I am releasing my premiums. Maybe let's say that 50, let's say I'm going daring. I pay 20 rupees premium, 20 rupees premium. my risk reward is 8,000 rupees and 7,000 rupees on a weekly basis, but it's not. Sure, it's been almost 6 months since we trade. Okay, you will end up in loss. Sure, Abhishek. No, let's simply do the analysis. We will not take any trades then. uh, oh boy. So happy to see you, and you, Siddharth, Selvi, Anand, and Divya, Vijay, Bhargav, Leo, Sudesh. I mean, so amazing to connect with all the numbers again. So, all I'm saying is that, see, this is one thing I will tell you. Okay, this is the simplest way to remain profitable. Okay, simplest way to remain profitable. What I know, this is my actual position, right? This is my actual position in which I am not losing at all. Let's not simply stick with one lot. Let's say 7 lots I am going. Okay, let's say 7 lots I am going. For this, I don't want to pay 7 lots. I mean 6 lakhs just to reduce and release the funds. It's taking this much amount, correct? 4 lakhs. So I was able to save 2 lakhs in the margins by taking the strike. Now, what I know for sure is I will be losing this 21 rupees by 13th of March, correct? Is everyone clear with that? Am I right? I will be losing this 21. If the market is not reaching 49k also, I will be losing this. This 21 will become zero, correct? Guys, are you following? I don't know. Yeah. So this is my actual position, and if it is reaching 50k next month or something like that, how much I am able to make? I will be able to make 1,05,000 rupees. That is a 20% return, right? So think from a big player's perspective. I am deploying 4 lakhs and I am able to make 1 lakh in 1 month time. It's a great money. Why nonsensically I have to do some scalping? 4 lakhs today, I make 1 lakh. Tomorrow, I lose 75,000. Day after tomorrow, I lose 50,000. Again, pay huge brokerage, many transactions, stress, everything. Now, simply I am deploying 4 lakhs and then I am making 1 lakh, right? So, this one I am taking to reduce my margin money. Without this, my margin money requirement is showing 6 lakhs. So to reduce that, I am taking it. Now, as an intraday player, or in this whole week, what I want to do is just remove this. Remove these three. What is that? I just need to earn 2,200 rupees. If I can earn this, then I'm done. My position, I will not worry. My position structure is this. My position's actual structure is this. But my target for the week before 13th, if I can capture 2,205 rupees, then this is excellent for me, right? Then when 13th happens, let's say 13th market has moved only 200 points from here. Okay, let's see what happens in that case. On 13th, market has moved only 200 points. Where is that? 13th. Okay. Now market has moved only 200 points. This position is giving me a profit of about 3,100 rupees. Okay, this position itself is actually giving a profit of 3,000 rupees without doing anything. On top of that, I have also recovered whatever I am going to lose in this edge, right? Then the following week, I will be switching to 20th expiry, right? 20th expiry. Probably on 13th, this will be again at 20 rupees, correct? So for before 20th, I wanted to capture this 21 rupees or whatever. Okay, that one I wanted to capture. So weekly wise, I am going to capture this to ensure I am profitable till we move towards April 24. I will be keeping on doing this. That alone I wanted to do. Or if you are a really ultra big player, just forget about this 20 rupees. Live peacefully. Don't even care about this 20 rupees. Just leave that. And then 20, 20, 20, let's say 20 rupees, 7 times you lose, 140 points you are losing. 140 points means from here, if the market has moved to say 49, 400, whatever, in this 140 points, you just need to detect. That's all. 140 points is nothing. Because when the market moves, this won't be 1,400. This will be trading around 3,000 rupees or something like that. If it is trading at 3,000 rupees, and then this one will not be at 900. This may be at 900 only because of the theta decay and all. At the time, it will be only around 900 or 700. Still, you will be making big money. So this way, how many trades you are doing till, let's say that you are weekly capturing the this one. Okay, let's say that you are weekly capturing this edge, whatever you are going to lose, that alone you are capturing. Okay, or one day you do some good trade, you know, that you are going to lose 2,000 rupees, 2,200 rupees into 7 weeks, 15,000 rupees you made on one day in a good intraday scalping, something like that. Then go on buying the edges and forget about it. That's all. Yeah, yeah, this is very good, Siddharth. So you can live very comfortably with this sort of things because your risk is very well defined. How much you are going to make, how much you are going to lose is also very well defined. Or simply take this trade, do nothing else. If you know that it is going to be a bullish day, trade intraday on the call side alone. Forget about the put side, so that this loss is getting covered. That's all. Whatever works for you. Recovery is up to you. How you want to recover or you don't want to recover. But this is the simplest way to live peacefully in this sort of volatile market. Because a lot of people are posting on a daily basis, market is extremely volatile. My god, my capital got saved, thank god I exited at right time. No need to worry about it. Wherever market goes, you will not be at panic. For example, with this position, without an edge also, without this edge also, even if the market rallies 700 or 800 points, what is that I am losing? I am losing 10,000 rupees. I have deployed 6 lakhs, 6.6 lakhs, and losing 10,000 rupees is nothing, correct? And that too is not a booked loss. It's only a loss for today. Just let one day pass. If there is any retracement happening, what market will continue to go till April upside only or what? Will it not come down? One day also, 500 points. That's it. You don't have to worry at all. What should people like me do, Satish? You are indifferent to risk usually. Oh, I, indifference to risk. I mean, the trigger for using that word has to be understood, Abhishek. Why are you indifferent to the risk? Either you know that even if the entire capital is gone, it wouldn't change a damn about your life. Then you can live indifferent. Or you have lost so much that furthermore this loss is not going to bother you anymore. So what is your experience that gave you this indifference to risk? Is the primary driver that needs to be understood. And if it is loss that has costed, then it is not a really being indifferent. It has We have become so psychologically dented that we don't care anymore, right? So taking a pause and then going with this sort of slow and steady growth, and feel that yes, market is signs you can make money, slow deployment, very slowly let money come, and then seeing it grow over time. Don't do any payouts. Maybe you have 4 lakhs. Next month end, till next month end, you have done only 4 trades, and then you have made it from 4 lakhs to 4 lakh 25,000. Again, you go and play in May month contract. It becomes 450, 4 lakh 50,000. And then by the year end, it becomes a 6 lakhs capital. You will feel good about yourself. You have seen that the money has grown from 4 lakhs to 6 lakhs, 2 lakhs of gain, which is about 50% return on capital by being patient. That is the lesson you should take. So take some short term goals and targets. 6 months, this is what I should do in order to build my psychology, in order to strengthen my mindset, things like that. See, what we have also cleverly done is, what we have also cleverly done is, um, see, what this we makes money only if the market goes up, right? But if it goes down, we are still making 12,000 rupees. Anyone seeing it? How is that possible? That's possible because I am paying only 1,400 rupees. Here I am writing off 900 and 500 and 60 rupees. So 1,460 rupees I am writing, plus the time value of it only will erode. There will be an actual value that will still remain intact. So even if the market collapses from 1,400, this might become 500 rupees, but these two will become below 100. This will lose faster than this will, before this turns 200, or this before this turns 500, these two will be below 150. Correct? So in any case, I will be making money when the market goes down. When the market goes up, suddenly it is going up, then also the risk is very low. Let's check. Oh, oh, oh. Look at these guys. Markets again going up. I would like to say thanks on all people. Really appreciate the strategy. Yeah, most welcome, Siddharth. Um, See, many times I wanted to do a lot of things, but eventually, what happens is today I got time. I have okay. I thought let's do. It's been very long time. I was able to come, but say tomorrow onwards I don't come again. Then what value addition is there for the members to be part of the community, right? Like, what am I contributing? At least, I see the general discussions going on. I read that and then say that extremely volatile, unable to handle this volatility, crazy stuffs are going on, market is going on all directions. How do I plan? My capital itself is only 1 lakh, 20,000 rupees lost. So much is there. Now I know if somebody's capital is 1 lakh and they lost 20,000, and in this market, if they are trying to recover, within 5 days they will blow out their account. No doubt about that. So, what is that we can do is to show them some sort of scientific ways of how big people think in the shorter time that we have over stream that we interact. Share something useful, and those of you who can understand what I am saying here, what sort of thing is being given here, um, really would appreciate if you truly understand what you are getting. I'm sure even if you go and pay, these are really, even in paid mentorship and all, people don't teach things. They just simply talk about generic ratio spreads, bull spread, something they will show. How do you adjust? What sort of risk managements you will have? Supposedly, if the market moves too fast to 50,000 rupee, 50,000, what can you do after that? Say you expect it to move by April 24th, but then April 1st itself, its market is at 50k. What can you do? Multiple things are there you can do. You can close the call which you have got at 1400. Maybe that will be trading around 3500 or something like that. You can close that. This will be trading around, say, 2000 rupees, and this will be trading around 1000 rupees. Now you go ahead and create a short straddle, convert that into a short straddle, manage the risk, right? So, lot of things that you can do. These are the ways that you can, scientifically adjust and roll on, and never let loss get into your account, or reduce the impact of loss on your profile dramatically by doing adjustments at right time. Hey, most welcome, Dio. Most welcome. So this is fair enough. Nifty is showing some sort of U-turn over here. Suddenly there is spike. So the key is, as a buyer, can you define your risk? And can you truly accept that risk? It's okay if you have chosen a strategy that's showing 39k as maximum loss. That is here, over here, it is showing 39k loss. When that will happen? When the market is at 50k. When the market is at 50k, I am losing 39k. Okay. Am I really ready to accept it? Yes. And then I really accept it on that day. That is what will help you in the long run. As a buyer, if you don't define this max loss and accept it, you have to multiply this into 10 and be prepared to lose that. Okay, now let's get into intraday players mindset. Can we do something here? Let's check. At this point, what I would suggest is there will be strong erosion. 100% if you are going to play intraday. This is, see, now whatever I spoke for all these last 2 hours is to promote long-term capital protection ideas. Hey, this is amazing. Thank you, Siddharth. Uh, oh my God, this is truly heartwarming. First person to have given some sort of super, what is it called? Yeah, it's called super, some 200 rupees donation from Siddharth. Thank you so much, Siddharth. Really appreciate that. Really means a lot. Oh, brilliant, brilliant. Oh my God, awesome. So um, let's focus here on how you can um, play this. As a buyer, you wanted to make money. First thing, let's say market is showing upside moves again, right? You wanted to enter and play, but you are also afraid. What if the market falls? Simple. Rule number one is go to next week expiry. It is already just another 90 minutes past. Next expiry is beginning. Now, why do you want to risk your capital? Putting all the things in your account into something that's going to expire in 90 minutes. Very sensible thing, right? Do not get into current week expiry. Go for next week expiry if you want to capture any upside moves. Second, market is already showing some sort of signs of willing to shoot up. Should I buy here? That depends on your capital. If you are someone who doesn't have much, then wait for your entries around 9 EMA. This, and see if it suddenly pierces and then touches here. This is excellent point of entry as well. So either 9 EMA or 20 EMA entry is what something I would suggest. After you have entered, market is coming down. Where I should do my average over here, because this is the momentum candle middle of that, and here you see that it has taken support and retraced and it never touched. So this would be my average. Two averages only, no further trades, because third average if you are doing, you don't have the time, right? You don't have the time, and we are not a BTST player. We are not going to carry it overnight. So only two averages: entry, second average, breaking which, and then fast, it goes fast on the downside. Book, loss, exit, close the day. Already the moves are happening, and then life, no, day I is, it's going towards the day I. Should I enter in now? No. You would have gotten something if you have entered, but the move has already happened. Now don't chase. So here is what I would do. If I wanted to decide I need to enter, what I would do is I'll go here, select 13th, because this is the strike I wanted. Now this is at 570 rupees, correct? And at the money, next week expiry, I don't want to buy in the money. Next week at the money is fine. 510 it is, correct? Now, what is 10 percentage of this? 50 rupees, correct? 50 rupees means 460 is a very ideal price for me to buy. If so, if I have to buy, just select and then put in, say 10 lots I wanted to buy, put it, and then say 460. This is my entry. This one, just place it. If it takes, it's okay. If it doesn't take, fine. It's not my day. That's how you need to curb, right? calculate 10 percentage, deduct it from the actual trading price, and then see if it picks up. If it doesn't pick up, close the terminal, go home. Don't do anything. Satish, 460 is too much. Probably I will be happy with 475. That is your choice. So that means you have more capital. If the market goes to 460 or 450, you have more capital to buy and average. Your choice. See, already it's coming to 500. Isn't it amazing? Now 498. Don't buy. Don't buy. Just place it at 460. If it picks up, why I wanted it to be picked at that level? Because when it reaches here, maybe it will be a spike. All you are seeing is a long wick, correct? All these are long wick. So you will not get time to enter 460 and then, or type market order, everything. You cannot be able to place that at that time. Probably 460 it is showing. When you enter at market, it will be showing 486. 26 rupees higher it will buy due to volatility. So rather you say buy it at 460. If it is not buying, screw it. I don't care. Right? That sort of thing. Likewise, patience only will pay off. If you are in a rush, it will only be hurting you. Correct, Divya. Today morning, a lot of people would have seen that because of volatility. Maybe you are seeing something at 200 rupees. You thought it is a good price to buy, and then you went and checked the order history. It is showing 212. 10 rupees higher you would have purchased. And then at 200, you will be averaging again. Right? So, why I am saying this is now the time is what? 2:10. Before 2:30, there will be one sudden spike. I am anticipating. Sudden spike all the way till 20 EMA. One spike and then next moment it will come up. If that happens, I wanted to capture that. And you cannot enter at that time because it is going to happen in fraction of seconds. You won't get time to do that. Right? So better to place the order. And the smart people, what you should be doing is, if Satish has placed at 475, you should be placing at 477. Correct? Yours should be the first one to get hit. If I am placing it at 460, calculating 50 points, then you keep it something like 461.35, so that it will pick yours and not mine. Correct? That's what smart people would do. Okay, so let's write. Go for next expiry. This is expiry day post 2 p.m. Okay, go for next expiry only. Second, check ATM price and deduct 10% value and place limit order. 3. If order gets picked, then exit at original price. You saw at 510, exit at 510. Right? So picked and then exit at original price. When I saw this, the strike was at, for example, it was at 511. Now I am placing an order at 460. And then let's say it gets picked, my exit will be 510. Simple. Be happy. That's all. If not executed and rally continues, let it continue, and you close the terminal. And never chase rallies on expiry. This is purely from my experience. If you chase rally on an expiry day, you will regret it big time. One day, if it not going in your way, you will really regret. I mean, your advice really good, but if many people take your trade, it will be your loss. That's why people don't share strategy on forums like this. And I know there are hardly six people watching, and I know beyond six people or 10 people, nobody is going to watch. So 10 people is not going to hurt my strategy. Say that the other streamers are getting some 1,000 views, 2,000 viewers are there. Sometimes very established ones are having 20,000 people watching concurrently. That person revealing a strategy, he should be worried it will not work. Hardly five people, why will it not work? So it's fine. So this is pretty simple. PNB view, please. Okay, Punjab National Bank. Oh, rejection at top. It's at a reversal. It's at a reversal because straight away what I can see is, oh, it's a 5 minutes time frame. Let me not jump to conclusion. One moment. Here is the rejection. It is happening. You can see this is the first time it got rejected. Second time got rejected. Third time got rejected. So this is good. It's a rally coming up. So it is U W. Can I call it a cup and handle? Yes, this is a cup. Oh, sorry, sorry. This is a cup, and this is an handle. But this is enough the 5 minutes time frame. Although it looks good, but if it breaks 20 EMA, then we are in for a corrections to come and test 200 EMA in 5 minutes time frame. But let me increase the time frame and check in 15 minutes. 15 minutes. Oh, many times it got rejected at this level. Hmm. If I go to one day, God. Oh, it's almost at the sorry. It's almost at the lifetime high. Yeah. Hey, this is very likely it might get rejected. Very likely it might get rejected unless it forms a new lifetime high and then continues to go up, which is very difficult given that Bank Nifty, oh, Nifty is also rallying. See, intraday basis, I cannot comment, but positionally, if you want to accumulate, best place to accumulate is 120 to 124 levels. That's the best place to accumulate. 120 to 124 would be the best place to accumulate. Peak is 132. It has made. Is this the lifetime high? I wanted to check if there was any time that it has made. Oh, oh, oh. Wait a moment. No, not lifetime high. Let's go weekly, monthly. 280. Rejected, rejected. Now the view entirely changes. This is one major point of support. Then where the market is taking another reversal is around this. I'm just going to talk out loud. This is one rejection area. So it formed triple top and then corrected so massively, and then formed W and then doubled. So from here to here, again same length it has gone up. Now can it continue to go up or will it come down? To answer this, we need little bit more details. This line is the most defining line. I'm going to change the color of it. Okay. Now, if it breaks and sustains above, my target for this would be first off the length. Okay, 170. If it sustains above 130, if it sustains above 132, to be on the safer side, let me give this. Yeah, this is fine. 130, if it is sustaining, then there is a possibility for 170 in the near future. But too many factors play around it. Fundamentals are there, and then you got to also see the results. I, there is so much effort that goes into individual stocks, studying individual stocks. You are almost doing the work of a CA to get it right. Charts alone will give too little information for the long run. You got to keep close track of things. Only what patterns can suggest, what the indicators are suggesting, and how do you read the technical things, that I am sharing. Of course, there are many factors attached to it, but largely, if you see a close above this and then continuing to close above one, this resistance too is there, right? Like 132.6 and above, it is sustaining. Go in long and then expect for 170 or something like that. So that's how I see it. Oh, Siddharth is saying fundamentally those old eyes are not visible to fish. Making too much money. Okay. And it goes on old eyes. It was very popular. Oh, okay, okay, fine. I see. Oh, Nifty. What has happened now? You see, Nifty silently has scaled up without making any fuss. Whoa. Not month. What is this? 5 minutes. Wow. Now Nifty also joining in the rally, and it has just bounced off sharply. And it is clearly supporting Bank Nifty. This is what I was saying. This is what I was saying, guys. Look at this. As it reached the strike, what has it? 488. You see this? 488. And I wanted to check the chart of this. Um, as was, did it go anytime? I wanted to check this. 48,000 of next week call. $35. 480 it has come, right? It has come to 480. As we were discussing, it has come to 477. This candle you can see, I'm zooming in. We were discussing in the charts about PNB. At that time, market has come to 477, right? That's the buy. That's a good buy. Now, it can be so sharp that it can reach 460 also. If you have got at 460, you don't need to do any averaging. But if you have taken at 480 and it goes to 460, then you are going to do averaging, right? So, last 90 minutes trades, always get it at a price where you can take it without making any average, than putting some money and then waiting for it to average, and then next 1 hour you are so restless whether market will recover or not. Don't. You just say that I am buying at 460. If it is not buying, fine, leave it. Like that you play. Oh, baby is up. I think our time will be done now, because she wouldn't let me do. Uh, Let me just check her and come. One more. Okay. Um. So my baby is up and she is not going to let me stream further, but I will see if she is. She just woke up, and if she is not uh, happy, then I have to end the stream. You can see it, right? It has come to 480 levels. Okay. Yeah. Yeah. Okay. So we are notoriously asking for a price so cheap, 460 rupees. You see, it's absolutely notoriously low we are asking. Why? Because the volatility is so high that we have to end up keeping 100 point stop loss or 80 point stop loss. Instead, we are keeping an entry which is notoriously low that you don't have to worry about the stop loss. See, at that point when the market was making the sudden green move, it looked like we missed an opportunity. But I said that I am expecting a move between 210 to 230, some sort of quick action on the downside, which exactly happened. Right. Only thing is that it didn't come to the price that we have placed, but it has come. It has come down. Right. That's the learning. Don't worry about sir, I missed the trade. Can I enter over here? No. Let's focus on learning. I may not be streaming next week also, right? So at least let's learn something that is going to work for a long time than to whether we are making money today or not. Mhm. Coco Melon. Coco, 1 second. Logged it, huh? Right, let's play. Jamal Kudu. Kudu. Hmm. Hmm. Ding, ding, ding. See. Okay. See? Right. And then remember, don't supposedly it has picked up your order over here at 460. Then place an order at the original price, which is 511. Correct? Have we posted that? Oh, we didn't. We didn't post it, and I deleted also. This one I will post it over there. Uh, she needs my attention because every time she wakes up, I used to sit and interact with her, play with her for 10 to 10 minutes. Today, I'm simply sitting and talking. She is looking at me strangely. What happened to him? Why is he not engaging with me? So your entry will be that, and exit will be 511, 510, 511, whatever. Uh, Sometimes, if the market is not, market is nearing 255, and the price has reached only 500, hardly 10 rupees is what that you are waiting for. But post 3 p.m., either it can have a very fierce rally on the upside or it can consolidate or come down. For the 10 rupees, don't take too much chance. 255, either 510 target if it is hit to take it, or wait till 255 if it is done. If it is not reaching there, whatever is the price, just take it and close. Okay, so that's the way to play. All right, I think shall we call it a day then? Because I want to really spend some time with her. Come on. Okay, guys, ending the stream then. See you all another time. Hi, Coco. Uh, come on. So, see you guys, and hope to catch you another time. And let the learning continue in our channel. Keep sharing, engage in discussions, share your views. Feel free to ask any questions that you have. Whenever I get time, I will answer. There are a lot of good, technically sound people who can answer. So take your time and have a great day. Um, Catch you all another time. Thanks.